Welcome to the Deep Dive. Today, we're embarking on an exciting deep dive into a featured stock, ICHI.
That's right.
Now, you might sometimes see ICHI linked to Thai Union Group, but just to be clear, for this deep dive, we're talking specifically about ICHI Group Public Company Limited.
Yep, ICHI Group, our source material is all about them.
Exactly. So when you hear ICHI today, think ICHI. Our mission really is to cut through the noise and give you the most important nuggets of knowledge about ICHI. Not just the facts, but, what they truly mean for you as an investor, perhaps. We'll structure this into 5 key segments. Their latest quarterly performance, future strategic plans where analysts see the stock price heading, their dividend policy and financial stability, and then finally, a concise investment summary. So here's the big question we're tackling today. Can this established beverage giant truly pivot to sustained growth, especially with, new challenges in its core market? Or is its strength primarily in its robust financial foundation?
That's the core tension, isn't it?
It is. Ready to become truly well-informed in record time. Let's unpack this.
Yeah.
So let's start with what's been happening on the ground for ICHI. What do the latest numbers tell us about their recent performance, especially looking at, say, the first quarter of 2025 and projections for Q2?
Okay, yeah. What's fascinating here is the mixed picture that emerges. It's a classic example of a company facing headwinds in its traditional market. In Q1 2025, the overall ready-to-drink green tea market actually saw a slight contraction, maybe 0.6% year-on-year. And then by April, it dropped even further, about 4%.
Okay.
And ICHI's own green tea sales declined significantly more, by 18%.
18%. Wow.
Yeah. This slowdown is largely attributed to a few things.
Yeah.
Smaller retailers reducing stock because consumption's been sluggish, and, believe it or not, less hot weather compared to last year.
Right, the weather factor.
And export sales also took a hit. They fell 36% in Q1, mainly due to an economic slowdown in the CLMV region. That's Cambodia, Laos, Myanmar, Vietnam.
That sounds pretty challenging for a core product then. Makes you wonder about the bigger trends at play. But you mentioned a mixed picture. What's the brighter side here, especially as we look into Q2?
Absolutely. Despite those Q1 headwinds, the outlook for Q2 2025 actually shows a notable rebound. Sales revenue is expected to grow by a solid 25% quarter-on-quarter from the 1.75 billion baht seen in Q1.
Okay, 25% quarter-on-quarter is significant. What's driving that?
It's driven by 2 main factors, really. First, customers starting to restock after those Q1 inventory reductions we talked about.
Makes sense.
And second, a really significant boost from their OEM, original equipment manufacturer business. We're talking about a forecast of 185 million baht in Q2 just from OEM.
Whoa, hang on. 185 million. What was it in Q1?
That's the kicker. It's a massive increase from just 33 million baht in Q1.
That's huge.
It is. It's almost like they're becoming the secret sauce provider for other brands, quietly expanding their reach beyond their own well-known products. And we're also seeing improving operational efficiency. Their factory utilization rate, it's projected to climb from 64% in Q1 to above 70% in Q2. That's a positive sign for margins.
Better efficiency, good.
Plus, raw material and packaging costs are expected to decrease by a helpful 1.5% to 5%. Every little bit helps, right?
Definitely. So, okay, that's a lot of moving parts. How does all this translate to their bottom line for Q2? And maybe more importantly, what's the full year implication looking like?
Right, connecting the dots. So, while the normal operating profit for Q2 2025 is expected to be around 320 million baht,
Okay.
which is, a decent quarter-on-quarter increase, but it's still actually a 9% year-on-year decline for normal operations.
Wow, okay. Year-on-year decline.
But ICHI has the significant extraordinary item that really impacts their reported net profit. They sold a large plot of land in Ayutthaya for 360 million baht.
A land sale.
Yeah. And this transaction will be recorded as an extraordinary after-tax gain of about 120 million baht. So this special gain is expected to push their net profit for Q2 to an impressive 416 million baht.
416 million net, so strong quarter-on-quarter and year-on-year growth on paper then.
Exactly. On paper, it looks great. 70% quarter-on-quarter increase, 10% year-on-year. However, and this is crucial, despite this strong Q2 net profit boost primarily from that one-off land sale, remember the overall revenue for the first half of 2025 is still projected to be down year-on-year, about 11.6%.
All right, so the underlying trend.
Exactly. And one analyst, specifically from Financia, has even revised down their normal profit forecast for the full year 2025. They're now thinking maybe 1.12 billion baht, which would be a 16.6% year-on-year decline for their core operations.
Okay, so that Q2 profit needs context. The land sale is masking some underlying operational challenges.
Precisely. While Q2 looks good superficially, the core business story is more complicated.
That puts a very interesting spin on their Q2 numbers. So given this mixed financial picture contracting core market, but these new growth engines like OEM, what does this all mean for ICHI's strategy moving forward? How are they planning to navigate these conditions and drive future growth beyond, these one-off gains?
Well, ICHI's management, they're clearly aware of the slower market conditions in 2025. They're not ignoring it.
Great.
They're even considering adjusting their full-year revenue target, which was previously quite ambitious, set at 9.5 billion baht. They basically anticipate a lack of significant factors to truly boost domestic consumption this year.
So realism setting in.
Seems like it. But it also highlights their adaptability. They're not just sticking to the old plan. However, they are strategically really focusing on the OEM business as a key growth driver. They're aiming for 500 million baht in OEM revenue for 2025.
$500 million from OEM. That's a serious target.
It is, and they're actively negotiating with 2 or 3 new customers right now, with manufacturing for these clients expected to commence, I think, in July. This OEM segment is seen as absolutely crucial for a more positive outlook in the second half of 2025.
Smart move to diversify when the traditional market is soft.
Definitely. Cushions the blow.
It certainly sounds like a strategic shift. Are there any specific new product initiatives on the horizon to try and capture new market share?
Yes, actually. A significant new product launch is Tan Power. It's an energy drink.
Energy drinks. Big market.
Huge market. It just began selling in 7-Eleven stores on June 19th. So very recent. This new brand is targeted to contribute 300 million baht in revenue in 2024 alone.
300 million this year. Ambitious.
It is, but it shows they're not just relying on OEM, right? They're also innovating within their own brand portfolio, trying to find that next hit. And then on the international front, the company reports a recovery trend, particularly in those CLMV markets we mentioned earlier, which took a hit.
Okay, so exports potentially bouncing back.
Seems like it. Internally, they also expect continued improvement in those utilization rates, getting above 70% in Q2 and potentially rising further in Q3 and Q4. That should definitely help their profit margins.
Right, efficiency gains.
And their joint venture in Indonesia, that's also expected to contribute more. Profit sharing projected to rise above 20 million baht. So you see multiple levers for growth, even with the core green tea market facing these challenges.
Okay, so strategy seems to be diversifying and optimizing. Now, when we talk about investment, price targets are always a hot topic.
Yeah.
What are analysts saying about ICHI's stock price going forward, considering all these moving parts?
Right, the $1,000,000 question, or maybe the 11 baht question here.
Oh, exactly.
Well, the current trading price as of July 7, 2025 is around 10.4 baht per share.
Okay, 10.4.
Looking at analyst opinions, there's definitely a range of perspectives, which is pretty normal.
Sure.
An aggregated view, sort of the average from 5 analysts covering ICHI for one-year price forecasts, indicates an average target price of 11.84 baht.
11.84 average. And the range?
The range is between a maximum estimate of 13 baht and a minimum estimate of 10.80 baht. So even the low end is a bit above the current price.
Okay, and the overall rating?
The overall consensus rating from 6 analysts over the past 3 months for ICHI stock was calculated as buy.
So generally positive consensus then?
Generally, yes. However, there's a more recent report. This one's from a finance analyst dated June 5, 2025, and it paints a slightly more conservative picture.
Oh, okay. What did they say?
This analyst revised their target price down to 11.2 baht. That's down from their previous target of 14.6 baht.
Whoa, that's a big cut. 14.6 down to 11.2. Why?
They did this after adjusting their target PE multiple. That's price to earnings, a common valuation metric showing how much investors pay per baht of earnings.
Right, a PE.
They lowered it from 15 times earnings down to a more conservative 13 times.
Okay, so valuing the earnings less richly.
Exactly. And consequently, their recommendation for ICHI was downgraded from buy to hold. It reflects a less positive near-term outlook compared to their prior assessment.
Interesting. So a hold recommendation from them.
Yeah, and it's worth noting this individual analyst's target price, the 11.2, is about 20.5% below that consensus average of 11.84 we mentioned.
Right. So that highlights the different ways analysts can interpret the same data,
Yeah.
right? And the underlying assumptions about future growth can really differ.
Absolutely. It shows there isn't complete agreement on the near-term prospect.
That's a crucial distinction. Okay, so beyond the immediate price targets and maybe the near-term volatility, what about the long-term financial health and the dividend prospects? Those are crucial for many investors looking for stability and income.
Ah, yes. And here's where Ichitan truly shines, according to the analysis we've seen. The company boasts a remarkably strong financial position,
Strong how?
characterized by high liquidity, which is great, but importantly, no interest-bearing debt from financial institutions.
Wait, zero debt.
Zero institutional debt. Think about that for a second in today's world.
That's
That's pretty impressive.
That is impressive. Very stable foundation.
Very. And their return on equity, or ROE, that measure of how much profit they generate for each unit of shareholder equity, it's been noted as consistently high. Projections are around 18.8% to 19.7% in recent forecasts.
Wow, high ROE too, so strong balance sheet, good profitability relative to equity.
Exactly. And this strong balance sheet and cash position are absolutely critical for supporting their dividend policy.
Which brings us to dividends. What's the story there?
Well, Ichitan is known for providing attractive dividend payouts. Analysts are forecasting a high dividend yield ranging from 10% to 11.3% for the years 2024 through 2027.
10 to 11% yield, that's very high.
Extremely high in most markets. Specifically for 2025, the expected normal dividend is 1 baht per share. Now, this translates to an impressive payout ratio of 115%.
Hold on, 115% payout ratio. So they're planning to pay out more in dividends than they expect to earn in normal profit.
That's what the forecast suggests, yes. It signifies a very, very high commitment to shareholders. It indicates a willingness to maybe dip into reserves or past earnings or even proceeds from things like, well, asset sales to maintain that payout level.
Which brings us back to that land sale we heard about earlier. How does that factor into this incredibly high dividend picture? Does that make it more sustainable, at least short term?
Ah, you're connecting the dots. That's where it gets really interesting for shareholders. The company has explicitly stated, quite clearly, that they intend to use the cash flow generated from that 360 million baht land sale.
Right, the one giving the 96 million after-tax profit.
Exactly. They intend to use that cash to pay out a special dividend after their Q2 2025 financial statements are released.
A special dividend on top of the regular one.
On top of the already high regular dividend yield, yes, this is a one-off event, obviously tied to the land sale, but it could provide an additional significant boost to shareholder returns this year.
Okay, so that 115% normal payout ratio might raise some eyebrows about long-term sustainability from operating profits alone.
It does, yeah.
But this special dividend certainly sweetens the deal in the short term. And it shows a commitment to returning capital to shareholders, using whatever means available.
Precisely. It reinforces that shareholder return focus.
Okay, so let's try to bring it all together then. What's the general outlook on Ichitan's investment appeal and long-term stability, given everything we've discussed? You've got the market challenges, the strategic pivots, and this, frankly, impressive financial health.
Yeah, it really presents a mixed but I think compelling investment case, and it honestly comes down to your investment philosophy, what you're looking for.
How so?
Well, on one hand, the core ready-to-drink green tea market is undeniably facing challenges. We saw the numbers. There was a slowdown in consumption, and at least one analyst downgraded the near-term outlook and price target.
Right, the headwinds are real.
They are, and this points to a need for caution, Due to broader economic uncertainties, potential volatility in things like packaging costs, definitely increased competition, and even government policy changes like the sugar tax. Those are risks.
Okay, so the cautionary side, what's the other hand?
However, on the other hand, the company demonstrates, I think, strong resilience and these proactive strategic shifts. Their robust OEM growth, that's a real bright spot. Couple that with new product launches like Tan Power and potentially a recovering international market, well, that provides clear avenues for future revenue diversification.
Finding growth elsewhere.
Exactly. And crucially, Ichitan's financial stability is exceptional. We keep coming back to it, but no interest-bearing debt and high liquidity. That's a huge plus. This strong foundation allows them to maintain that highly attractive dividend policy, which is now further boosted by the potential for that special dividend from the land sale.
So a challenging core business, but strategic pivots and rock-solid financials. It's a fascinating dynamic.
It really is. And this raises, I think, an important question for you, the listener. How do you personally weigh these near-term market challenges and maybe a revised, more conservative growth outlook against the company's powerful financial health and those consistently high dividend payouts.
Yeah, that's the key question.
It's a classic example, really, of a stock where significant value might be found in its income generation potential and that balance sheet strength, even as it navigates some definite top-line pressures in its traditional business. It depends on what you prioritize as an investor.
A very interesting case study indeed. Income versus growth challenges. Well, that brings us towards the end. Finally, if you'd like us to cover any specific stock in a future deep dive, just let us know. We're always looking for suggestions.
Yeah, let us know.
And please don't forget to follow, like, and share to support our team here. It really helps us keep doing these deep dives. Thank you.